One.
A lot can change in 12 hours. If you went home long, most stocks, you're probably in a bad mood this morning. Thanks to Moody's downgrade of some U.S. banks. We got some earnings. We got a big winner in Lilly. It's helping out some other drug stocks, but we got a lot of losers to discuss. This is why you're here to find out what's going on in the upcoming session. It's Tuesday. It's pre-market prep. Let's go.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. Welcome to this Tuesday edition. We're sinking. We're down 35 handles. I can't even count. 35 handles at 45.03. Big reversal off that close. The buck right back up 60 cents at 102.47. Bonds getting a little lift, up a point and a half at 123. Crude in the red by $1.82 at 80.12. Gold in the red by 8.10. Silver in the red by a quarter at 22.98. Bitcoin up $240 at 29,495. Let's bring in Triple D and Triple D. You shut down trading at 8 o'clock, and then you get the 8:03 news drop on the banks. What a wicked market.
Everything wicked here today. Yesterday, everything was pretty nice. Investors like, oh, the bull's back. Buy the dip is working. We were skeptical. I put out a skeptical tweet by saying to this morning, nice day to sell stocks. I think the bears remain firmly in control. Yesterday, another suckers rally. We've seen 3 of these, and since this market's turn, the big difference is, again, why I've turned bearish, at least in the short term, is because they are punishing stocks reporting any type of bad news severely. Where before, last quarter, you were missing, there was forgiveness, there was bounce backs, dip buying was coming in. We are not seeing that. What we are seeing is the opposite, where you have a stock like Datadog. I just want to start with this one because it's my point. DDOG lowered guidance, sales guidance by 2%. 2% lowered sales guidance. Stock down 22%. They are punishing any stock that misses earnings, even by the smallest little fraction, just a little bit we missed by, just slight reduction, the size reduction. No, you cannot miss earnings this earnings season. And this is
What about
Apple
Apple? Apple beat. It wasn't good enough.
Still not
Yep,
good enough because what they have driven.
Bring us off the cliff, Mitch. Bring us in. Reel us in off the cliff, Mitch.
One of the biggest things. I agree with what Dennis is saying here, and what really happened though in the revenue outlooks, right? I think that one of the biggest things that we were giving companies this big lift in forward-looking earnings was AI. AI. It's not there. What company is telling you that they're making this much money because of AI? I still remember everyone was saying that NVIDIA was going to make like 60 billion in 2027 because of AI. But every company is telling you that we are going to make money. And I can bring us to Palantir with this because specifically stated on the earnings call, he says that Palantir aims to make money on AI rather than just produce computer-generated poetry with a tool that boards don't approve of. He said, we'll figure out how to monetize it. But they're not being monetized right now, these AI tools. And we gave all these companies this extreme evaluation lift, all based on AI. At least that's what I feel like.
But the problem was, Mitch, it wasn't just companies based on AI. We started with AI. The bubble started, but then they just started buying everything. And
Agreed.
yes, valuations are still cheap in some sectors, but we could take it into Lilly too. I mean, Lilly's trading 50 times earnings. I mean, and it's going to have, because there's NVO, there's good drug news here today, it's going to be up more here too. But we have just gotten to a point where in the first half of this year, it was all multiple expansion. There was no earnings expansion. It wasn't like Apple was growing earnings. When Apple went on this 30 or 40% run that it had early in the year, it wasn't because they grew earnings 30 or 40%. It was they didn't grow earnings at all. It was all multiple expansion. They took it from 24 times to 30 times. So when you're buying stocks just on hopes and dreams and AI dreams, this, if you have any type of, slight disappointment, the market punishes them severely. And, back to the debt, no, GNRC misses, and it's not an AI story, misses earnings by 2 cents. You cannot miss earnings, down 25% on that report. You cannot miss earnings right now. They are not forgiving the stocks. So, yes, most companies that beat, I think this is something like 78% of companies that beat this earnings season. But you know what? The stocks aren't going up, and they're exhausted. They're tired. They just ran a marathon in the first 6 months of this year.
Yeah.
It was incredible. It was one of the most hated rallies. It is time to cool off, but it's scary when they cool off as quickly as they do. And I keep coming back to like a stock like Datadog, because here's a stock that had an incredible run, up 50% in 2.5 months. It gets half of it back in one day.
One day.
My GNRC, I got burned on that one. Incredible run, up 30% in basically 3 months. Gives it all back in 3 days. You know what turns investors off of the stock market? Losses, and losses that happen overnight like a boom. Story back from when I first started trading here. I just want to
Holy mackerel.
give you context here. Take us back. I started trading break trade in 1999. 1999, 2000 stocks only went up. They only went up. We were going to go up forever. It didn't matter if the S&P was trading 30 times earnings or 29. It didn't matter that Walmart had a PE of 45. It didn't matter that Cisco was trading 80 times earnings. It did not matter. Nothing matters. Stocks only went up. So we buy the stocks and we sell them tomorrow. I had a friend in university, says, I just buy, these mutual funds. I borrow money, I buy these mutual funds, and I make 20% guaranteed. I'm like, the fairy tale world that they were living in all unraveled. Now, I'm not saying we're going to that, but I'm saying a lot of this was irrational exuberance. This running up. And my story was going to be with Lucent Technologies. What started, people don't really know why did all of a sudden it all unravel? It started with one stock. The reason that the tech bubble burst, and it burst, it didn't burst overnight, it burst over a long period of time. But the reason it started was one stock. It was an AT&T spinoff. It was Lucent Technologies. And I can remember I was still in university or 2000. No, so I was at Bright. But I can remember waking up like in the morning and my buddy was saying, Lucent's down 51%. I was like, do you mean 15%? No, 51%. It was most widely owned stock in the US at that time.
Most
and
actively traded too.
Down 51%. 5-1. People lost half their money on Lucent in one day. And that turned so many people off, and then it just snowballed from there. So what I've got to say to you bulls out there, you need to stop having stocks fall 20 to 25% on a slight earnings miss. Datadogs cannot continue to happen, because if they continue to punish stocks down 20%, DDOD is bouncing, but if they continue to punish stocks down 20% on 2% guidance reductions, we got problems, because there's going to be a lot more earnings misses, slight reductions, because this fairy tale world that all the bulls are living in, where the earnings are just, earnings don't matter. We're just going to buy 40, 50 times earnings, pay 33 times for Microsoft. That will unravel quickly if you start seeing stocks get punished like this. So I'm not going full bear here, but what I'm saying is you don't want to continue to see this happen. GNRC falling 26% because they missed, earnings by 2 cents. You can't have stocks falling 20% when they miss earnings by 2 cents, because that means the expectations for everything is just way too high.
All right, you want to get into the dog report? It's trying to catch a bounce here, but or do we want to go to the Moody's downgrade of the U.S. banks? I mean, that.
I'll give a quick sum up here of Datadog. So
Sure.
the EPS was a beat, the sales was a beat, And where really Dennis is pointing out, and it's showing up all over, is EPS is still a good outlook. Revenues now down to 521 million, 525 million on the high end versus the estimate of 534 million. And so when you start knocking down those revenues, yes, they're going to start coming after you. At least it seems like in this current environment.
But give it perspective, Mitch. That revenue
It's 10 million.
That revenue guidance cut was 2%.
Yeah.
They cut revenue guidance by 2%. They knocked the stock this morning down 22% on that. And
Yeah,
it's
a little
not
excessive.
just Datadog. Look, at the chat, and they're correct. Look at AYX this morning. And some of these are bigger disasters, but AYX, this is a miss. So they missed earnings. They actually beat on earnings. Sorry, AYX beat. But on the revenue guidance, they actually, I'm looking at the Q3 adjusted earnings. They're supposed to be above there too. But the guidance misses at 10%. So the revenue guidance, they're reducing it by 10 to 15%. So that's significant. It's down 22% this morning. Then you have international flavors. IFF is a theme here. I know we went off the rails, but we're talking the down 20% club. IFF was a flat out miss. 86 cents versus a $1.10, 2.93 billion. This really was a disaster quarter, and maybe it should be down as much. But again, another stock down 20%. I mean, you're popping in these stocks. Somebody just said, in the chat, trying to make 4 or 5%, then they go through earnings and they fall 20%. Why would anyone want to take anything through earnings? I've taken a few stocks through earnings, and I'm like, I don't think I want to take anything through earnings right now. And I've argued before, maybe there's a play to just be short all these stocks that are reporting, because the ones that go up 5-6%. The ones that go down
Beyond Meat
really get hammered.
Beyond Meat also in that same category of down big today, missing
down 15%. Boom. Beyond Meat sucks, but and again, that's a mover, so it could have been up 15% on earnings, but you're seeing these outsized moves to the downside, and that will spook investors. If you continue to see some stock, or 1 or 2 or 4 stocks in the case of today, fall 20% on earnings reports, people get spooked, and they're like, I don't want to take my stock through earnings. I don't want to get, I don't want to get data dogged. I don't want to get Beyond Meated. I don't want to get, Generact. It will turn people off the stock market. So the bulls thesis, they need to stop having these stocks go down 20%, or they at minimum need to bounce. They don't bounce after. The GNRCs continue to go down.
All right, let's bring this over. We were just talking just yesterday. I think Dennis mentioned it. We were like, is the regional bank situation completely done? Well, it seems like we got another catalyst here, as Moody's Investor Service cutting the credit ratings of 10 U.S. regional banks, saying that it reviewed the ratings of 6 other institutions, pointing to lower profits and higher funding costs. Banks like M&T Bank, Pinnacle Financial Partners, Commerce Bank Shares were amongst the banks that Moody's downgraded. All cuts were made by a single notch. All banks remained investment grade. So that's another thing. It's not like they're getting put to junk. But one thing to keep in mind is this included also 6 other banks and a negative outlook on 11 more lenders, including companies like PNC, Capital One, Citizen Financials, Ally Financials, Bank of Ozark, Regions Financial, Fifth Third. They're pretty much all the major ones are being included here, and you definitely are seeing them down in the pre-market. Will this continue and make a new kind of movement for this regional bank scare? Or is this just kind of more something that we could push to the side?
I'm not buying the dips. I just feel like it's just, we haven't even dipped that much. I mean, you can come in, you can say buy the dips. So Fitch starts this by obviously, on the US debt. And now you get Moody's coming out, and they're like, not to be, we're going to downgrade something too. So they come out with all the banks and, are putting them 10 regional banks on declining profitability and a possible recession. So listing them off here, you got BK and USB and STT. I have a trading position, STT, TFC, COF on negative, outlook to negative, COF, CFG, Fifth Third Bank, MTB, PNFP, BOKF. So that's the ones that are mentioned. But then, obviously there could be other regionals that, are possible. It could be impossible. You've got them up there now. Excellent. I mean, KRE has been looking good. the charts look pretty good. But, have we run up too far too fast? Have we now just forgotten that we lost 3 or 4 banks earlier in the year? Maybe it's not a bad call. Maybe it's time for some of these stocks to cool off a little bit because it's been a pretty good run. Again, more, evidence that this market wants to cool off, and they get, something like this, it cools off quickly.
Well, now the other thing is, what about S&P? I was just looking up the different rating agencies. Moody's, right? Fitch, then Moody's, S&P. Now
S&P,
back
you're
in
on deck. You're on deck.
yeah, S&P's on deck.
There
They
you
did it
go.
in April of 2011, and that caused a pretty good sell-off in the market. I was just looking at the charts here. The market did recover, but I think it's a different kind of situation now, right? Inflation. I mean, who was talking about inflation numbers back then? So, man, oh man, it just really caught the market by surprise right after the AP 8 p.m. close here. I tell you, I'm still holding some regional banks, and they're getting hit, still in the green on a lot of these. But man, this second downgrade, man, that just very I guess the first one was unexpected, but I guess the reaction to the second one is not. And Dennis, you saw some after hours action in this too, and boy, oh boy, what a move in these. I don't know where you go. I mean, the thing about a lot of these banks is they've had tremendous rallies and they're
Yes, they
nowhere near
have.
their lows of the move.
Yes, they
Like, where
have.
do you go?
There's just nothing. Everything ran now. We have the everything market. We talked about it in June. What hadn't gone up started going up. The IWM started breaking out early June. This is when we turned around and said, me and Money Mitch were like, we got to get off this bear train because IWM's breaking out now. So now we get everything going. So now the everything rally has happened. The everything rally occurred in June and July. So now what's left to rally? They were trying to rally some of the beaten down meme stocks at the end. To Joel's point, that's usually towards the end of the cycle. Well, you saw, some unraveling in like Upstart yesterday. Full disclosure, I do have a trading position in that. But you saw unraveling in a lot of these, names that have been going up irrationally. Quick unraveling, like boom, boom, down $20 Upstart. How you like them apples? Just give back. It took 2 months to go up, and it was an incredible move. It gives back half of it in 2 days. Nothing turns investors off like, like watching your stock climb. I make up 1% every day. And then boom, it goes down 20 and you're like, what the hell just happened? I don't even think Upstart reported anything.
Not yet. Not till tonight. It could be down to 40s, 30s
it's down
by
another
tonight.
6%. Full disclosure, like I said, I have a trading position. I'm going to trade it. I don't even know what to say at this point in time. On
momentum names definitely broken.
If you look under the hood, there's many disasters everywhere. Here's the problem. You look under the hood. We didn't have these many disasters. Like in January, everything was a disaster. It wasn't many disasters. Everything was a disaster. And they started relief rallying. And then they just went. But now in the last few days, so we had this incredible bull market with some stocks went up 100%, met up 200%, just incredible runs. But now you're keep getting these data dogs, these many little disasters here. Yep. That's a serious problem because many disasters, you know what happens when you get a little bit of fires, all of a sudden, you have the wildfires and they start catching everywhere. It was the same reason we started breaking out on everything back in June. So if we continue to get these little mini disasters, it will spread. And that's why I think you've got to be selling rallies. And yesterday was a fantastic opportunity to raise some cash. We need to hold the previous day's low, 446.27. But if you're bullish, you can't be making new lows because if you take out that 446.27 from 2 days ago, then you start thinking about 440. But there just seems to be like overhead supply everywhere now, and we didn't have that before.
All right, let's keep going. Let's go into another report that's always seems interesting for a bellwether of the economy. Let's go to UPS here. United Parcel Service Q2 adjusted EPS at $2.54 beats the $2.50 estimate. Sales of $22.1 billion missed the $23.11 billion estimate. Full year 23 revenues outlook is $93 billion versus a $96.77 billion estimate, and did a little bit more research on why the revenue is coming down. Of course, reduced forecast factored in after the labor contract with Teamster. And then when you look at their domestic package revenue, it was at 12.79 billion versus a 14.81 billion outlook. And then international package revenue also down at 3.53 billion versus a 4.68 billion consensus. So pretty much struggling on a lot of their areas. And then you're going to give more money to the labor. Yes, this is going to affect it negatively moving forward.
The problem is UPS is a more gauge of consumer spending as well. You don't like to see UPS, seeing revenue fiscal year 23, 93 billion versus analyst estimates 96 billion. Tells me the consumer is spending a little bit less. So maybe it's starting to show up. Maybe they're getting a little bit more stretched. We know the consumer is doing stuff. The question was, are they still buying stuff? So maybe they are sacrificing buying stuff to do stuff because it's busy out there. The recession is not imminent when you're going out to restaurants and doing stuff. People are finding money to do stuff. Hence, why the airlines had really good earnings, why a lot of other things. But are they finding money to buy stuff, or are they just moving it, saying, well, I'm not going to buy this, whatever the hell I was going to buy, knickknack, or, this new couch or this desk or this, chair for my house. I'm going to just go on a trip instead. So far, Amazon was fine, so that looked okay, but FedEx wasn't fantastic. UPS a little bit concerning here. So it's somewhat concerning. I'm not throwing the towel on the consumer here, just saying there's cracks.
I think there's another factor
They're an issue.
with the UPS, and that's
Mhm.
people that if they need something, they're not ordering it. They're going to the store. They're getting out. I mean, that now we're
People go to the
3
store,
years.
Joel?
Yeah,
All
it's
stuff goes to the
go to the
store.
store.
Nobody else
Yeah,
does.
that's my social life for me. No, I mean you don't have to get. I mean, we still get our daily deliveries and stuff, but
Yeah.
who needs. People are going out buying things. Just real quick, recapping the price action here. If you were holding out for the lows of the move, it was just under 167 and it didn't get there. It got to 168.61. We bounced $4 off it, but I think if on a decline here, keep an eye on that area. I mean, it's a whole zone. 166.30. There's multiple lows there, so I could give you that as potential support if we get there. In order to get to the fill the gap, it's going to take a while on this one. 180.74. Street kind of leading the right way into this report, though. You've had 6 or 7 down days before the report, so a little pop, not shortening in the hole, and not too sure we're going to get back even under that under that 170 area. Just take a quick look at FDX Federal Express. Oh boy, that had a triple bottom. Now look at that as resistance. I know that report's a little bit later in the cycle, but you can mark. Oh, that's not even too far away. 262.24 would be a gap fill on that one. So definitely punishing it. Not as severe as the UPS, but FDX. Look at, I don't know, only down 366 so far. I don't know about this one.
All right, all right. I see you guys out there, team. Don't worry. We're going to go to Eli Lilly. We will mention
Oh.
AMC a little later today. I see the apes in the chat. They're
The apes
definitely
are in the
wanting to
chat.
talk.
Okay.
They want to talk some AMC. But let's go to the more important first. Let's go to Eli Lilly here and let's talk about the healthcare stocks today. Eli Lilly Q2 adjusted EPS at $2.11 beats the $1.99 estimate. Sales of $8.31 billion. Beats the $7.58 billion estimate. They raised full year revenue guidance. Also, just want to state here, positive prior guidance here was on an adjusted EPS at $8.65 to $8.85. They're now seeing it up to $9.70 to $9.90. So big jump there on the adjusted EPS outlook. Positive results in phase 3 for their Trailblazer Alzheimer's study. That's going well. Completed submission of their chronic weight management drug. And that drives us also into the major news today coming from NVO as they announced Tuesday that its weight loss therapy, semaglutide, led to the 20% reduction in adverse cardiovascular events in phase 3 trial for obese or overweight adults with cardiovascular disease. Of course, This is their weight loss drug, and it achieved primary objectives. So that's why NVO is up, and it's actually giving Lilly also a nice lift since they're going for their weight management drug.
That was the reason Lilly was actually up before. If you bring up the chart, you can see Lilly was trading up before the earnings report here. It started running on the NVO news, and then obviously they had their earnings report and they raised guidance, and it was a good report here too. It gets up to 500. I mean, I don't know. Lilly trading 50 times earnings though. I'm like, it's got everything going right now. Definitely perfect. It's been just everything's been going perfectly for them. So, should it be up at all-time highs? Maybe, but it's still trading 50 times earnings. I mean, I sold it when it got back to 25 times earnings. What a mistake that was, as I bought it when it was 9 times earnings back like in 2011 or 2012. So valuation, just continues to expand here. Everybody thinks that it's going to grow into that multiple because this weight loss drug is going to be the biggest drug that the world's ever seen. Maybe that's the case. Better not have any hiccups along the way because it is priced for perfection.
Wow, you cleared the $500 mark when you got to 503.06 in the pre-market trading. Oh boy. I mean, Berkshire Hathaway was a different story, but I think you had a different market yesterday. If you have, the only thing I'm gonna say in this one, if you have a price target anywhere near here, you're getting a pretty good opportunity because it's just a big stock. It's up on big volume. My expectations that it won't go back to the pre-market high just because there's just got to be some just option, people with option. If you had, let's say you took a flyer on the 470 calls, I'm sure there was not an expectation for the straddle to have this big a move. I could give you support. Yeah. If you're waiting to buy this thing, stick your order out at 455. That was the top of yesterday's range. Don't see that coming into play in a while. But what a move in Eli Lilly. The NVO too. I know Michael Crockett's happy about this one. He's been asking about it. I mean, you get the news. You're blowing away the all-time high by over uh by $10, $12. I guess the only thing I'd say, if you got targets in this area, or you could take them, or just move your stop up. I mean, because I think this is a gift pop in both of these stocks.
One thing that I would say is I know Dennis and I have always been kicking ourselves for not having Eli Lilly when we wanted it at 330s, but now here
when it
close
had
to
that pullback.
500. Dennis, would you be selling here? I think I would have hit the sell button today.
I'd hit the sell button, yeah.
I'd hit the sell button today,
But I'm
for
early
sure.
selling always, so maybe.
Yeah, but it's good to know also where you and I would probably sell the position. I think because another thing to think about is this has come a long way since March, right? It's up 60% almost since March. That's a pretty good move for Eli Lilly,
Who
right?
cares about you guys?
Run.
What if you're an institution that's long,
Do you
Incredible
keep it up
hundreds of
here, Joel? What do you
thousands of
think?
shares?
What do you think? Are they keeping
Oh,
it
I've
here?
already said what I think. I mean, I would have been out at 470 or 480. I wouldn't be hanging around
This is a
up
nice
here,
gift
but
pop.
yeah, drill down on your shorter term charts for this one. I mean, the important thing too on a day like this will be a lot of liquidity, off the open. So if you do get a sympathetic run, like back over five, let's say you open at this area, you run back over 500, you come down through the open. I can't see it. I mean, if you're short, you're eating it. I don't know what you do off the open, but man, oh man. 500, 503. What a move in Lilly, and same thing. I mean, I think the institutions are being coy here, but we'll see what happens when liquidity comes in. I mean, it's already traded a $500,000. That's a lot for Lilly
Anything can
in the
happen today.
pre-market.
Anything can happen tomorrow. But I mean, if you're coming in and investing in Lilly now, I feel
Oh,
like you're really late to the party. But again, these parties go on a lot. Sometimes I leave a party at 11 o'clock, goes till 2 in the morning. So, timing, like nobody knows when exactly that, they're going to pull the rug, or, when the party's going to end, or the cops are going to show up, in the case of like some of these other stocks. But it's difficult to, sit and I mean, and some people just hold and hold and hold and hold forever. But, take it back to Biogen. Chat's talking about this one. I mean, Biogen, the Alzheimer's drug, the move up to 450. It went over from like 300 to 450 in that one day, Joel. I mean,
yeah.
that was like the sell of all sells. That was the
It did it
opportunity.
a couple times. It did
Yeah.
it a couple times. Originally back, I remember in 15 when it did that, and then it got that pop in mid 21. But as Harlan Pyan would say, sell your peanuts when the circus is in town, and we got a full blown circus in those few stocks.
Don't worry about the peanuts. What about the popcorn and AMC? Let's go to it.
Oh.
Is there AMC Entertainment Holdings Q2 adjusted EPS at 0? All right. Not too bad. Beating the 4-cent loss estimate. Sales of 1.35 billion beat the 1.29 billion estimate, and AMC attendance up 12.2% year over year.
I can't talk AMC on the show because if I say anything negative, people just hate me. So I'll
What?
just leave it at that.
AMC? You don't like AMC, Dennis?
I'm not saying anything positive.
I'll say it for you. I don't like it, guys. I don't like it.
I didn't say it. It was Mitch that said it. So when you spend the 2,000,
No, believe it or not, I was looking at this yesterday to maybe just make a little bit of a play. But at this point, like, let's be honest, guys. AMC, it's not coming back to these levels. It's at maximum, maybe what now? A $20 company. I would never, ever in my life probably look to see AMC over 30 again.
I'm just going to comment on the short-term price action, getting the Barbie lift here. Just alert our traders and investors that you have one daily high at 548. That's a little bit less than we're playing. So you want to see follow through that. And then things open up on the dailies. That was on the 8 news that it popped over $6. So 548, make sure you clear that and have a sustained bid. And then you can see a couple highs over $6 going back since March. And if you're looking to buy it on a pullback, you're not too far from the top of yesterday's range. That's only a dime away at 528.
Shall we do the Palantir? I know the chat will kill me if we don't actually go through the earnings here. So the Q2 EPS here at 5 cents in line, sales of 533.32 million, missed the 533.88 million estimate. They did authorize a $1 billion buyback. Government revenues accounted for 57% of total sales. Recently announced a contract from the U.S. Special Operations Command that could be worth up to $463 million. And you guys heard my AI comments earlier. They're saying that they're trying to figure out how to monetize it, not that it's being monetized right now.
I bought this last night at 1609 on that first.
You had to. You had to.
I had to. Well, no, I didn't have to do anything.
You too.
I just looked at all those
to.
16s and I was like, if this is going to bounce, it's going to be at 16. I looked at the chart. I looked at the dailies, multiple lows at 16. And I'm like, all right. I'm like, just going to, and I did it on half size. So I was like, I'll just bite. And I'm like, it popped up to like 16.75 like a minute later. And I was like, I'm out of here. So I took a quick like 60, 70 cents. And I was like, I obviously should have held it. I did not foresee this thing going all the way back up to green, but it did. And now it's started to leak here again because the overall market is leaking. But the 16 buy was kind of an obvious one. Obviously, I sold too soon though.
Did you catch it? Did you catch it on the way down?
No,
or
I waited till I saw a little bounce and then it chopped around there just above 16. It took straight through 16.
I see
And then it
15.
chopped around there and I was like, I'm like, this is a level and this stock is still loved here. I'm thinking this is going to be buy the dippers that come into the stock, and they did. So anyways, that was a good trade. I had a lot of bad trades last night too, so don't kid yourself. This has been an interesting, it was an interesting night.
Yeah, I think we talked about this one on the closing. I mean, who knows where it's going to, the long term for this. But man, that 16 was a nice area. You got to pop. You actually went green on this thing. What was the close from yesterday? 17.99. I think I look at that close today, 17.97, $18. I think that's good resistance. I don't know why it got back up to 18.50. But the Bulls got their work to do to get it back over the close, and then coming back on the downside. Don't know if you're $1.50 off the low, so you might have to wait another couple days or a week market to get it back at that $16 area. Nothing really relevant. 116.74 low, but you traded through that by over $1 in the pre-market. So there's a look at Palantir.
All right. I was going to take a look at Lucid, but that thing ain't going nowhere, man. I don't think we need to talk too much about that. Let's keep moving. Let's go to our guest today. I know that you guys are as excited as I am. Just say really quickly, fire in the hole and get to the chopper, because you guys know who's coming. It's our man, Kenny Glick.
Come on,
All
get to the
right,
chopper.
hit the bid, get to the chopper.
What's
I
up,
have that
boys?
t-shirt. I should have wore it.
What's going on? How we doing? The Warlock in the house. Of course, you guys can check him out on hitthebid.com. Let's get to the action. Palantir has been making great moves, and different stocks definitely have been riding the momentum. Has the momentum been broken here?
Abso-Smurfly. Yeah. Who holds stocks into earnings reports? By the way, Dennis, I follow you on Twitter. You nailed it. You said this market just went from a buy on dip to sell on rip, and its sentiment changes just like that. If the downgrade of U.S. debt and Apple reporting earnings and not going up 10% hasn't opened your eyes, then what else do you need? So again, I don't hold stocks into earnings reports anyway. It's been a great run. Everyone's a genius when you go up for 3 straight months. I've been selling before they report. And again, I bought the dip on Palantir yesterday. And, again, most of the stocks that I owned last time we were on the show, I don't own them anymore because I don't own stocks. I mean, it was fun while it lasted, and the jig is up. So now I'm back to cash, and we're playing the game.
Do you are you shorting stocks on the rips, or are you like seeing and taking the other side now? Sentiment has turned, like looking for those pop-ups to get short, or how do you trade it? It's more of a question.
I come in and I look at, like today, I'm looking at Palantir, Para, Global. I'm looking at Beyond Meat. I'm looking at Central. I'm looking at Chegg. So when they're gap down, especially after I've sold them, I'm just looking to buy. I'm looking to put these dips. And again, if they consolidate enough, I'll look to buy Beyond Meat. Even at, again, if it goes down to $12, I'll start sniffing around half numbers, whole numbers. So go right back into day trading mode. Now that we've had some fun swinging and investing, we're right back into just trading VWAP and looking for reversions on these gap downs. Again, they haven't been really great. I was looking at Palantir and Square for bounces. They never came. We were looking at GNRC for a bounce. It never came. And that's also an implication that sentiment has changed. The buy-on dips they're a little bit scared right now, and they should be.
We've seen a lot of different catalysts hit the market, right? Over the years, but now with these downgrades of the U.S. debt and then the banking debt. I mean, going back into your trading history and stuff. I mean, there's always seems to be like these unknown catalysts. Looking at the bank stocks with the rally, the rally that they had, or are you just staying there, or let the dust settle?
I'm absolutely back to being a day trader. So again, a lot of the things that mattered to me 3 months ago do not matter to me whatsoever right now. And that's what I like about, again, being able to pivot. That's why I've survived for 30 years. First sign of danger, I'm out. And I also sell the winners and the losers on the same day. I don't care if I'm taking small losses, because most people just sell the winners first because that's an easy sell. And then all this stuff is the dreck, and the dreck usually gets worse. So then you're stuck with your losers. And next thing you know, all the profit that you made that you're already locked into starts to dwindle because the ones you're left with are getting worse and worse and worse. So I just hit the monster key and I get rid of all of them at the same time.
The monster key.
Yeah.
You like all. Big red button.
Back in the day.
Do not
all
hit
I got
during
right
bull
now
markets.
is I still like Palantir. I might switch from stock to options because I don't want to sell into this report tonight. I got the rig, which again, look what's happening right now. We were on the nice collision course with 10. I held through the number. It was all right. And now the stock's back to 8. I still got a few ones, GDRX. I like some of these stocks that are been hammered so much that, again, where are they going to go? But, you're up 20, 30% on a position going into the report. Why not ring the register?
Why not, indeed. And one of the things that I definitely agree with, Kenny, is you just mentioned it. When rotation starts going against you, you got to be quicker than most, because if not, you quickly not only give up those gains that you had, but those losers can really quickly start dragging you down. And then you take that equity wave hit. And I think that's what major day traders run into in their problems, in their equity waves, right? They start climbing that equity wave, but then they take major down draws that just destroy them versus just continuing to climb that and be willing to be patient in a time like this. If you can't short, just waiting for the longs to set up again. I know that's one thing that you teach often, of course, and you teach a lot about on VWAP. Are you looking for more of kind of mean reversions coming on the downside also? Because I know that you like looking at stocks that start fading away from the VWAP, coming back to it. Is that the type of play you'd be looking at in this environment?
Well, the gap downs, I'm looking for reversions to the upside, but the overall market, I'm still, again, the Qs are hanging in there. This is just a standard pullback. You got a double, almost a triple top at 387 and change. You came in the 15 points. You just held support again in the pre-market, that 371 area. If we break 371 with some volume and some gusto, we could drop another 20 points. That's the trade that I'm looking for. So if I get the signs and volatility, you got UVXY's finally not as dead as it's been. VIX finally sprung to life. You've got reasons to sell now. I still need to be convinced. So you got to break down under that, major support on the Qs. That's going to be where I look to short. I don't like to short individual stocks because if I do short these Qs, I'm probably going to hang in there for 3 days. Usually these sell-offs are good for 3 days, and then they make the turn. So I'm stalking the Qs for a big position short. But other than that, I'm just sticking, again, with these gap down stocks, looking to play the day. Like I said, it's not that I like Beyond Meat long term, but when you're down 17, 18%, usually you get washed out over 20%, and then you get a little turn. And for us little day traders, we're buying 2,000 shares of a $12 stock. It pops 30 cents. Have a nice day. That's what we do. And, that's what I've been doing forever. So, right back to that. And we've got a huge list of stocks that are reported today. So there's going to be a lot of action. I don't think we're going to have a boring August because August used to be great. I remember, Dennis, we used to have great August, and August became just the most boring, awful month. I think there's too much at stake right now for August to be boring. I think it's going to be all over the place.
I keep thinking it's going to slow down, but now as the market starts to crater here, now you get investors nervous, and it's like, I better, do a little bit of, maybe, portfolio adjusting here. So institutional money managers are moving money around here so far. So far, no crickets in August. Yeah, I know. I'm kind of looking forward to a couple of days of just consolidation, but right now the action is just great. And again, you've been the action's been carrying through the whole day. Usually by between 12 and 2, I'm taking a nap, but there's been plenty to do.
It's some reversals. I know. It started a week ago Thursday with the DOJ. I mean, the market's just been getting hit with bad news. But I think you make a very good point, and I was looking for the Friday. What a horrible day on Friday. The old Friday, Monday purge, right? Yeah. And then you open up the 6 p.m. open. It turns out to be the exact low of the day. And then you mosey up and you're like, you don't get long the whole day. And then at the end of the day, you're like, man, well, why would I go short on that kind of close? What a strong close. You got the momentum. But I want to turn it to some individual issues here. I know you're good at catching turning points and AI. I mean, we could go to the stock AI kind of in no man's land, but where are you at? I mean, is that, Mitch is calling for the AI bubble. It's been burst. People are not really showing any profits from it. What's your take on the whole chat GPT and the AI craze?
Well, the easy answer was Palantir to play the AI. I like that name. That was my AI play. We were buying, again, I don't know if you remember the joke, AAOI. We bought the stock because you got 2 A's for the price of one, and the stock went up 1,000%. I mean, that's the kind of market we were in 2 months ago. That's fun. But, if you're looking at some of these names, I use extended VWAPs. I use very, very specific prices. So if I was still in the AI, it did break down slightly. But, again, you're looking at 31 and change as your danger zone there. Because if it gives up the 30s, you're going right back to 25. And then fear takes over and this thing could go right back to 18. But, again, right now, that stock's been hanging in there pretty well. I'd be dumping it if it breaks under $31. But that whole sector, listen, that was the name of the game. And I can't wait to see what NVIDIA does on their earnings report, because I think this idea of just mentioning AI 10,000 times if there's ever been a sell on the news moment, I gotta think it's going to be, when they report. So that's where I'm at right now. And most of these stocks, they're just going to fade, and you're going to find some support. And the ones that don't find support, like my NNOX, what a dog. Sorry about that one, guys. This one has not caught a bid. And, again, some of these you go down on the ship with. Again, just gave back 6 months of hard work on this one. We have some long-term leaps on it. Garbage. But, again, and this was a very easy story to get involved in. Johnson & Johnson bought a stake in the company. We were like, all right, here we go. They got our back.
Yeah.
And next thing you know, it's down 50%. So, it's okay to be wrong. You just don't stay wrong. And if these stocks start to roll over, just hit that monster key. It's a great thing. It's ripping the Band-Aid off. Just get rid of them all at the same time. Get back to cash, refresh, and then, like you said, when the dust settles, there's always opportunity.
Yes, awesome term there and quote. It sounded like you've been listening. Also, my man Dennis Dick says that one all the time. It's not about, understanding about being right or wrong, but understanding when we are wrong so that we quickly adjust. You guys see how nimble and quick the Warlock is. Definitely check him out, of course, on hitthebid.com. I'm going to throw up your link right here in the chat for everybody to go check it out. Like always, if you guys want to know more about it, you guys can just hit Kenny up. He'll definitely get you guys in. And I definitely, what I want to do, Warlock? I want to get your son on. I want to get him on here.
Gotta hurry.
So we're going to have to push to get that happening. I got to see the Warlock Jr. coming
Yeah, I
in
was
here.
just going to say that.
We calling him the machine. Actually.
The machine. I like it. I like it. So
no
he
emotions,
deserves
Nice.
the real
emotions,
get
no
to the
fear,
chopper.
all algorithmic trading.
He
Nice.
deserves to get to the chopper. He's the real one. All right.
Come
So
on.
we'll bring him back on. Always good to have you, Kenny. We'll have you
Good to
back
see you
on.
guys.
Definitely
Love you,
check him
Kenny.
out,
Thanks, Kenny.
guys.
All right, I'll see you guys. Good luck today, everybody.
Thank you.
Take care,
All right.
Kenny. All right,
Nice
let's
bounce.
get back to the market
Nice
here.
bounce hand over here. We are coming back here. We almost got, I guess you can cancel your bids right now at Friday's low. That was the line in the sand for the S&Ps this morning. 4493.75 was that panic low on Friday. You got within a couple points of it. Now you got a 13-point bounce. So I think someone just came in with a little bit of a fat finger when we breached the 4,500, but back above yesterday's low. So some of the buy the dippers have already bought the dip.
And you're not going to break that mentality, but not overnight. And that's why I say, you don't have to sell in the hole. You're going to get opportunities here. And we had another opportunity yesterday. I mean, I just think overall it's turned. I think the path of least resistance is going to be lower. I think we're going lower. But I think short term here, you're going to get opportunities and use those opportunities. If you're all full in, and margined out along this market, thinking this party's going to continue, I believe you are wrong. I may be wrong, but I think you're wrong. I think there's going to be some more pain here ahead. And it's the little tea leaves that are giving me signals that it's time to take some risk off. Do you have to go all to cash? No. Do you have to go shorting stocks? No. But if you're 100% invested in this market, or in some cases 200% because people invest on margin, please, I think it's time to just, raise some cash, get a little bit more cash, be a little bit more conservative, because I do think the second half is not going to be nearly as easy as the first half was for the Bulls.
All right, let's go to an interesting stock that had some decent report. QSR, Restaurant Brands International, coming in with some good sales. I guess Dennis has just been eating nothing but Tim Hortons, because same store sales growth of 11.4%. Burger King same store sales rose 10.2%. They are spending a pretty good amount on advertising for Burger King as they try to really get those sales started there. They spent $10 million on advertising for Burger King alone during the quarter, beating on EPS here and also beating on sales.
People are eating at fast food, whether that's a trade down that they're maybe not going out, or maybe they're just finding, but the fast food restaurants are still busy. McDonald's, though, think about the McDonald's report. That was a fantastic report. And they turned around and pulled the rug out from under it.
Yep.
So
That's
maybe
exactly what I
QSR
was
is going to
thinking
just
of.
rip roar, but you look at the 78 and you think, holy overhead supply and resistance, like crazy up here. So great report, but the stock has run as well. So, I mean, this goes to my point, just being short all these stocks in the report. Here's a beat, comps up 10%, and the stock is, Traded 153 shares. Nobody cares.
No one
And
cares.
it
I know.
reported, and it reported 2 hours ago. Nobody cares. So on these huge beats, and this is a pretty huge beat for a fast food restaurant, you're not seeing this relentless buying. We have to own this stock. You're seeing crickets. And then when they miss by 2 cents, they punish them down 20%.
Yeah.
Market sentiment has turned here. I think the QSR should be higher, but I don't know.
Tough
It's
day.
not going higher, not very fast. Maybe it's going to go once the stock opens. Maybe you're going to see this thing rip higher, but you have resistance up at 78. And after McDonald's, I'm not, going to say that this fast food restaurant, that's what it is, a bunch of fast food restaurants, it's going to just, rip up 10% on this report.
Yeah, Mickey D's. It was wild on that earnings day, and I've kept thinking about that 500 level. It had never been there, so that's the first thing I was thinking about for QSR. I mean, you're open right at yesterday's high. You got a good report, so if you want this one, you got to catch a bid right away, right off the previous day's high and close. 74.66 was the high. And then I would just be thinking, if they really like this report today, I think you should get half of this move back or close to it. And that would be up at like the 75.5 area. No daily highs except for 75.29. So if you can hold a bid off the open here, next target on the upside be 75.29. That nestles in right with the 50% retracement of the recent move. And how about Wendy's? No one cares about Wendy's, do they? That stock just...
I was gonna bring in Chipotle, also not a good move after their earnings, so.
Chipotle. Ooh,
and they try to buy the dip for a couple days and it starts to leak again.
Exactly.
It's not working. It's not like last quarter where, we bought Airbnb and AMD after they disappointed and we did really well with those buys. It's different this time. They are not bouncing, and they're not bouncing right off the bat. People thinking like, they're coming in here, stock's down 20%, it's bound to go up tomorrow. That worked very well last quarter. That is not working this earnings season. CMG back down to the lows, near the lows.
What's also not working is I'm taking a look at the utilities and they're going lower. You can take a look at it by XLU, or take a look at Duke Energy today. Q2 adjusted EPS at 91 cents, misses the 98-cent estimate. Sales of 6.58 billion, beat the 6.57 billion estimate. They affirmed full year 23 EPS guidance here, but the XLU looks horrible to me.
Well, the bond market
too.
Yeah, the bonds, and like, why take risk? Like Dennis mentions this a lot. Utilities, you're paying 4, 5, 6% with risk. I mean, you bought this thing at 69. We'll see ya. This is back at 60 with the XLU, the Duke. I mean, this is until, and also you got some economic data coming. Maybe we could get a little bit. What I'd like to see is little relief rally, into those numbers on Thursday and Friday, because I think that,
I'm scared of those numbers, man.
Yeah.
We've heard from it. Oil has been hot, man. And if we get some kind of spike in inflation from CPI, how will this market react? All questions to be had, right? I mean, that's going to be definitely something else. What do you guys think about the billionaire Charlie Egen merging Dish and EchoStar? I saw that. Who wants Dish, man? Who wants Dish?
I know.
I don't know how you go after this company, but hey,
this story is over.
Maybe he sees something. He says to expand mobile and satellite telecom empire. So
some things are just
EchoStar.
obvious. 5 years ago it was obvious that Dish was in trouble, and then streaming in the last 2 or 3 years. You're turning around and investing in Dish networks when you see what's happening in streaming. The long-term trend was just going to go against you. I mean, anybody who was buying Dish at $30, $40 back in 2021 was not reading anything. Like nothing. Because we knew streaming was taking over. So is it surprising that Dish is $7.40? This might be one of the most obvious trades that was out there in the last 3 or 4 years. The cutting of the cord, the cutting of the satellite Dish cord, the streaming just took over here. It's why AT&T and Verizon, the same thing. Dish Network, all these stocks, hate them all.
You can't even find a channel on that thing, the Dish. There's like
the commercials, Joel. The commercials are just out of hand. They must be have the subscribers so down that they're putting more commercials. It's half commercials. It used to be like 30% commercials. It's half commercials. You watch your show for 5 minutes and there's a 5-minute commercial. Then it's 5 minutes of show.
This is why I
and
pay
5
for
minutes of
no
commercial.
commercials.
My kids go nuts because they're used to just watching their streaming. They're, what the hell? They can't watch that. None of the younger generation tolerates commercials in the middle of their shows. They don't tolerate it. So not to that extent. Like maybe 30 seconds they'll tolerate it on YouTube. They're not tolerating a 5-minute commercial. They're not tolerating it. The whole business model is completely broken for all the streaming has just decimated.
Marketing, Dennis.
And if you're investing in these legacy TV companies, you are doing everything wrong.
You're noticing an even more shift in marketing overall, right? Let's just be honest. These companies and brands moving forward will be trying to do different marketing. They're no longer thinking about the $4 million commercial. They're thinking about giving the influencers 20,000, 30,000. Let them do the push and hire like 50, 60 people to push your brand versus just doing one commercial with that amount of money. This is where the shift of the next generation is going in marketing. So that's one thing that I would definitely put out there. If you guys can understand this trend, maybe you can find some edge there. All right, guys, let's go ahead. Let's wrap up the market here. It's 8:57. We can take a look at something else, but I think at this point, let's just look at the market. Let's see how we're reacting. Do you feel that for some reason the Moody's could actually affect some of the bigger banks today? What do you guys think about that? Like JPM, GS?
They're all
these
way
stocks
down.
have been ripping.
Banks are slaughtered here today. The banks are slaughtered. TLT probably not helping them because TLT is roaring higher here today. And we've been worried about the TLT breaking down for the overall market. But now the TLT is going up because it's risk off. Like it's like, oh, yeah, we need to go protect our capital. It's funny how, all of a sudden, that relationship comes back into play. Day like today, they're selling everything. So they're buying bonds. They're risk off day. But the banks are slaughtered here today. Across the board, they're all down 1.5, 1.6. Regionals are down 2 to 3% here across the board. They've had an impressive run here too. So maybe not so much some of these bigger ones, but the regionals have bounced a lot, and even the bigger ones have bounced pretty good. I mean, it just feels like it's time to ring the register and like everything. Like I like Kenny's sell all button. Sell all. Let's sit out and watch because right now the risk reward just doesn't set up well. I mean, you're seeing stocks fall 20% on earnings and going up 5% when they're good earnings. It just doesn't set up well from the long side. So sitting out this next little while, I think is prudent if you're an investor.
Keeping an eye on similar to the S&P, keeping an eye on Friday's low. We got close to that in the pre-market, and we caught a nice bounce. So I think that vigorously, the bulls have to really defend that low, and so far they're doing a pretty good job of it. Coming back on the upside, I'd be looking at well, you like to see the close on a lot of things, but it doesn't look like that's going to happen. So I just would look for some minor retracements. Midway back in the S&Ps would be 45.18. So that would be a potential target with your longs. But we got the news. The buy the dippers have come in, at least at this point. Let's just see what happens off that opening bell. So a lot of things we got covered here today, folks. Great job. Thanks for joining us here on Pre-Market Prep, and back with you guys tomorrow morning.
They want to talk SMCI.
I got you.
The stock made a new high again yesterday. SMCI and NVIDIA have not, they will not let go of these stocks. This is like the two stocks that they just won't break. And
but this is also probably like
eventually.
Yeah.
But when does SMCI report? Is that report coming up?
Let's take a look there. I'll grab it for you right now. But yeah, I mean, this is one of those stocks that I feel like, the trend is your friend until it isn't, right? And I always talk about
when
that.
When the rug pull happens, it's going to be vicious.
Vicious,
Right now, it's the hardest stock to short because you got everything starting to look like, toppy.
Are you ready? You ready?
Making new highs.
Hold your breath, Dennis. Tonight.
Is it tonight?
Tonight.
It is. I even have it on my sheet. It's on my sheet.
This is the beginning. Will this be the beginning of the disaster? Will this be the beginning of the break?
Well, maybe they just blow it away. Maybe this turns the AI story back on again, too. It could go either way. I mean, if the expectations are so high here. Like we talked about Apple going to the report saying they have ridiculously high expectations and they couldn't meet those expectations. Amazon had ridiculously high expectations, though, too, and they did. So it's not necessarily, that it's going to just tank on the earnings. They need to absolutely blow it away. Say I 200 times on the call and talk about how the AI earnings are going to be robust. We cannot hear AI earnings gradual. Might learn from Microsoft SMCI. On the call, the AI earnings have to be robust because people are saying this is a huge AI play here, and it very well might be. But this stock has went from $100 to $350 in 2 months. The expectations are very high.
The top outlook from analysts on Wall Street, just given today, Loop Capital raised the price target to 400, and I don't see anything else past 375. So we're at 348 here. That's my outlook. I just don't see too much on the upside. I see more return potential on the downside. We'll see what happens there on SMCI. Would I be shorting this stock? By no means. I think it's going to be more of a measurement of how AI is doing tomorrow. If we see this stock down to 300 or to 280s, oh yeah, I'm going to be worried about NVIDIA doing the same type of move.
I don't think that's going to happen. I hope that's not going to happen. It's unbelievably resilient. We have to say that. There are hardly any stocks
this one is
from the last just still making new all-time highs.
Yeah.
This stock has unbelievable resilience. You wonder, just if it doesn't get sold here today as profit takers come in, like a Kenny. Are you holding that through the report? So it's down here $5 here today. And, we always like owning stocks in the reports, but you'll wonder if the opposite isn't true here. I'd be really nervous to hold it through the report. Not saying I don't know if it's going to miss, but I think intraday here, before it reports, is making a call intraday. I think you could see some selling pressure actually hit this stock. I think this stock could go down 10 or 12 points here today for the simple reason is that maybe, people are going to want to book those gains before going through the report. And then after the report, it's a crapshoot. So I have no idea after 4 o'clock where this is going, but I kind of think that this actually could go down here today just because there's so many people sitting on gains, and I wouldn't want to hold it through the report if I was sitting on gains. So that's my thought process. But at 4 o'clock, who knows?
We'll see what happens there. Just wanted to give you guys at least, I wanted to thank the UBS analyst for raising Wayfair. Yesterday, I went shorting it, Dennis. I had to, man. I was like, thank you, UBS.
We talked about that at 90. And
I was like, come on, man. Well, come on. I had to do it. I went short Wayfair yesterday. We'll see what happens, right? I think it's now important just to watch the daily and see if this starts to turn. Fill the gap. That's what I'm looking for first. Fill the gap down, make your way back towards 70, and then we'll see if this market really starts to break. This is just one of those bets where a stock has gone way too far, and I'm looking for it to start coming down. Bunch of stocks, I started seeing that yesterday. We've seen it in the upstart. Will they do it to Carvana? I think this is setting up also for a similar move right back down. Affirm right back down. Look at the action here, guys. These momentum names are starting to turn. Beyond Meat was a part of that. That's why it was such a wicked move right back down, because it was already getting the lift before this. It was having a run before this. So you give me bad earnings and you were lifting, well, I'll tell you, you should be right back down to where your evaluation was. And so that's where we got to be careful on names like that, that are lifting. Carvana, names like that. I don't, eventually these could turn around and it could be wicked. So would I be investing in Carvana? By no means necessary, at least for me. I'd be investing in a name like this.
I don't think you can invest in any of these names. Like,
yeah, because they're
valuations, but I mean,
valuations are
trade
just
them, but the problem is, to Mitch's point, is the trend is breaking in a lot of these. The Carvana looks heavy, just like Tesla looked heavy yesterday morning. We were talking about through 250, and then they bought the dip again, right where they kind of thought you might buy the dip. That double bottom at 240 didn't quite get down. They got down to 242, but now it's the weak here again. So there's certain stocks that are just looking like the momentum is breaking. And that's an issue too. I mean, it's not like, you just go bang and then you crash like Black Monday all in 27% one day. Most of the time they crash and then they get, you get some hits, get some generals start to get taken out, and then it starts to spill over. But I just keep thinking, like, I want to be selling into rips more than I want to be buying into dips. And I'll finish on that.
I agree. I think that's great way to wrap it up. And I think we'll be all looking to see what happens, right? Of course, we've been seeing correction. We've been seeing some stocks pull back. Dennis has been mentioning how some of these reports, right, are just not getting the same love that they were getting. Let's pay attention to see if this trend continues. Of course, tonight That will be a big report to take a look at, SMCI, to see how that keeps moving. And keep your eyes out on these tech names, right? I'm still seeing Microsoft drop. It's now down about 10.5% from that earnings report. Will that continue to drop? Will that Apple continue to drop? Those are names that I want to see come back if the Bulls want to bring this back. We'll see what happens. Keep up with Triple D Trader, Dennis Dick. Go do what you do best, my friend. Go get after it. All right, guys, we'll bring you guys over now to live trading. That's coming up next. Don't go anywhere, team. We got a lot more to get to. And Jay, you like it on dips? I don't know. I don't know about all that. Earnings reports, I think, are not really mattering that much right now, Jay. But hey, to each his own. If you guys like Wayfair on dips and Carvana, I put them all in the same boat. But we'll see what happens today. Let's get to the action. Let's go to live trading. That's coming up next. And then later today, of course, I will be doing the book club. Yes, we have over 600 members on the book club, growing every single week. So if you guys want to join the book club, hit that link, and I will see you guys later tonight at 7:30 p.m. Eastern. Of course, it's only about 30 minutes, so it's a quick little session. We'll be going through 2 more interviews as we continue, of course, in our latest book, of course, Market Wizards by Jack D. Swagger. Who's a market wizard out there, or who wants to be a market wizard? Interviews with top traders. Check it out, team. It's not a bad book. We've been running through it. I'm going to keep running through it on the book club. So join us as we keep going to the next level. We'll see what happens. Like always, hit the like button and come over to live trading. We're starting up right now.